Hello and welcome back to our class. So in this topic, we will be talking about the financial process in the SAP Business One and how it reacts to every transactions that we perform. Okay, we will also be discussing the chart of accounts associated with this accounting information system. So the content for this discussion would be first, of course, will be managing the chart of accounts. We'll be talking the different levels of each account and what does it do to our uh, transactions. Okay, so we have different types of account, levels of account, and uh, storage cabinet, or what we call the general ledger for each account that we have. Okay, so we will be also talking about the journal entries. Okay, we'll be performing on how to enter a manual journal entry without any uh, transactions that we can perform in either purchase or sales. Okay, so we'll be doing some transfer of uh, value, okay, or money from one account to another. Okay, we'll also be creating an account, okay, beforehand. Okay, so uh we'll be also talking about the recurring postings. Okay, these are the transactions that we perform regularly in our company. Okay, so we'll start the discussion with the uh, what is a chart of account. Okay, so so the organization of the chart of accounts follows the GAAP, okay, or what we call the generally accepted accounting principles, okay, in which there is a separate drawer, okay, or the container itself for accounts representing the assets, liabilities, equity, which is the capital and reserves, the revenues, which is the turnover, okay, the cost of sales, expenses for operation cost, okay, and then non-operating income and expenditure, as well as the other revenues and other expenses or taxation and extraordinary items. Okay, so in SAP we have this uh, cabinets, okay, or drawers that contains each of these type of accounts. Okay, for example, here we have level 1 classification, that is the drawer for assets. Okay, and then the second one would be the level 2, which is another container inside that container to organize things up. Okay, so for example, here in the assets we have fixed assets and then current assets. Okay, so under fixed assets we also have another group of accounts or container of accounts that will be held uh, to organize things up, such as as for fixed assets we have tangible assets and intangible assets, and we also have groupings under those classifications until we reach the what you call level 5 account type. Okay, so these accounts from level 1 to level 4 is a title account. Okay, it means it doesn't have any value, but it serves as a container for what we call the active accounts. Okay, the active accounts are all held in the level 5 and they contain every uh, every details of any transactions that is associated with that account. Okay, so for example, we have uh, petty cash. Okay, so the petty cash is under level 5 account. Okay, so the petty cash is under the level 1 to 4, which is just a title account. Okay, so the petty cash account is an active account and it will contain the money, okay, or the record of the money of that account. Okay, so in short, we have two types of account. We have title accounts and then the active accounts. The title accounts is just a container for the active accounts. The active accounts is the one who is responsible for recording every transactions, and it contains the money on that account itself. Okay. So in the general ledger, we distinguish the balance sheet accounts and income accounts, which is the also called as the profit and loss accounts. Okay. So the balance sheet accounts is the first three drawers. Okay. So the asset, the liabilities, the capital, and reserves. Okay. So uh, uh, the bookkeeping balance of these accounts are kept from one fiscal year to the next. So we'll be talking about that later, the fiscal year thing. Okay. And then the balance sheet accounts is the for reference purposes, it reflects the monetary value of the company, such as the stocks, assets, etc. Okay, so that is the balance sheet accounts. These first three drawers here. Okay, so the last five drawers, the turnover, cost of sales, operating income, and expenditure, non-operating operating cost, non-operating income and expenditure, sorry. And then tax and extraordinary items are for the profit and loss accounts. Okay. So, uh, uh the lower drawers are not all profit or and loss account drawers. So it's just a container for any changes that you made or you make in the SAP itself. Okay. So the profit and loss account reflects the changes in the company value, such as the selling of stocks or the cost of goods sold, increased revenues, or uh, initiating a starting inventory. Okay, so this is just an operating container of uh, things in your financial monitoring. Okay, so the five drawers below. Okay, so there we have the classification of the drawers of the ledger itself. Okay, so some of us, we are just fan of these three uh, accounts here, or yes, three classification of accounts. So uh, the reason is that these three accounts is the one who is usually uh, utilized to make balance sheets. Okay, so that's one. Okay, so the balance sheet is the one that summarizes the value of the business assets, liabilities, and owner's equity accounts. Of course, this is the document that we accountants produce, okay, to see things if everything is balanced up to whatever transactions that your company has made. Okay, while the trial balance is the details of each account. Okay, beginning balance for a particular period, all of the debits and credits, and then the ending balance. That's the trial balance. Okay, and then if we will also define what is the profit and loss statement, it is the after at the end of the fiscal year. Okay, so the trial balance includes the beginning balance, while the profit and loss statement is the end of the fiscal is created after the end of this fiscal year, and then the balances of these expenses accounts will be subtracted to the balance of the revenue accounts to come up with the profit and loss of the fiscal year that we just had. Okay, so uh, to access this chart of accounts, okay, so we'll go on to the SAP. Okay, let's wait. Okay, so I'll just log into my SAP here. So I'll just select my server, and then a company. Okay, so then I'll just log in my account. Oops. Oops. Okay, let me just refresh this one. Okay, so there we go. I'll just close this one. This recurring posting here. We'll be talking about that later on. Okay, so to access the chart of accounts, we'll have to go to financials and then click chart of accounts. Okay, so just like the ones that I have been talking about earlier, we have the assets, liabilities, capital, and reserves that will be used for the balance sheet, okay, or balance sheet accounts, and then the others are for just profit and loss accounts. Okay, so in editing the chart of account, you have two ways. Okay, you can edit directly here in the chart of accounts windows, or you can also go here and the edit chart of accounts. So we'll just use the first one. Okay, so in editing the chart of accounts, either uh, you will be renaming an account or creating an account. Okay, there's no deletion of an account. Okay, so here we have different levels, of course. Okay, so we have a level uh 1. Okay, level 1 active account. This is not an active account, it is a title account. Okay, so the others, okay, different levels here, here, and here. Okay, so you can see this is the first level, level 1, 2, 3, 4, and 5. Okay, just like I said, the level 5 is the active account. It contains the actual balance of that account, the money of that account. Okay, so every transaction that is associated with that account, it will reflect here. Okay, so while title accounts doesn't have that function, it holds as a container for these active accounts. Okay, so let's try to create a simple uh, account. Okay, so we'll go to one of the assets that usually uh, utilize. Okay, so let's try to create an account under cash at bank and in hand. Okay, so we have here petty cash. Okay, so we'll try to create a title account, okay, under cash at bank and in hand. Okay, so we'll try to add a title. So what you're gonna do is click on the add icon here, and it will create a title account. Okay, and then just jail account number, let's say, let's just follow this one here. Okay, so 15,300, oops, it's not, 15,300,02. Okay, so the name would be uh, uh petty cash, or let's say this class, for uh, students there. Okay, okay, so the external code is optional, of course. Okay, and then we'll just add here. Okay, so it created after the cash at bank and not after the petty cash. Okay, so that's all right because it's still the same uh level. Okay, so you can either move it onto active account or title account. Okay, you can just create that one. Okay, but we'll just use this as a title account, a container for the actual account that we'll be creating. Okay, so since we have a title account under cash at bank and in hand, okay, we'll create an active account under that. Okay, so there. Okay, we'll choose active account, and then I'll try to create my petty cash account. So for example, uh, Luigi's petty cash. Okay. Sorry. Okay, that's supposed to be the account number. Okay, so we'll just follow here. 15,300,02. Let's say A. Okay. Okay, and then Luigi's petty cash. Okay, or let's say petty cash, and then name it as Luigi. Okay, so we can classify this as a control account, cash account, or other properties of that account. Okay, we'll just use this as a cash account, and then it will be cash flow relevant. Okay, so let's add that one under this title account. So you just make sure that you click on the title account before creating the active account, so that it knows, or the SAP knows, where to put that active account. Okay, so add there. So we have an active account under the title account that we just had. Okay, so here we don't have any money or any balance on it. So later we'll be transferring some money inside that one. Okay, we'll perform a sample transaction, maybe sales. Okay, so there. Okay, so let's try to create a sale. Okay, regarding that or to use that account. Okay, so just to create let's try to create a sales order. Okay, uh let's say uh no, we'll just try to create a one-time uh transaction. Okay, so we'll make use of what we call the uh here AR invoice plus payment. Okay, so that it will directly create a transaction for a customer. Okay, without using the sales order delivery, or you can also use that one. Okay, so we'll just use this one as a uh direct transaction. Okay, suppose we have a customer that had just visited our shop, and then we'll just try to make a sale. Okay, so this is a one-time customer. Okay, and this will be held on let's say OAC Computers UK branch. Okay, my branch. And then I'll just try to sell him. Okay, maybe he wants to buy here mouse USB. Okay, he wants to buy two pieces of that one. Okay, with the unit price of 17.50, we'll have uh a balance due of 41.13 together with the tax. Okay, so if we will be adding this one. Okay, so remember guys, this window is AR invoice plus payment, meaning it performs all of those process, okay, in just one swoop. Okay, yeah, okay, so let's add that one. And then here, okay, uh we have the payment means window here. Okay, indicating how the customer will pay to you. Okay, maybe, okay, he'll pay for cash, okay, directly to our account that we just created. Okay, so I think that is 15300 there. Okay, 30002A. Okay, so we have no account balance there. Okay, we'll just use that one as a container for the payment of this one-time customer. Okay, and then copy balance due. Okay, or if you don't have right click, if you are using a tablet or what, okay, you can just type in your balance due here. Okay, okay, so this AR invoice plus payment indicates a one-time customer wants to uh buy an item. Okay, the mouse USB, two pieces of it. Okay, and uh once that we have just clicked the add button there, okay, you can see that the payment means window pops up, and then request where it will put the money of that customer if he will be paying to us. Okay, so there. Okay, we just indicated that the one-time customer wants to pay cash, and it will go directly to or the payment will go directly to our GL account number 153000002A. Okay, and then let's add that one, and then add. Okay. You cannot change this document, of course. It will have a reflection on the changes for your warehouse status or your inventory. Okay. Of course, your inventory will be deducted by 2 on that certain item, and then you'll also have to uh, experience the changes in the financial records that you will be performing in this transaction. Of course, yes. Okay, so there, operation completed successfully, and this transaction is now closed. Okay, because it's just for a direct selling of goods. Okay, no more sales order, no more delivery, no more AR invoice, just direct selling of goods and then accepting the payment right afterwards. Okay, so here we have the AR invoice plus payment from one-time customer, indicating uh, two items of this item here. And in the accounting tab, you can see that the journal remark, okay, or the journal entry created is on not like the uh, ones that we see on the regular process of sales order, delivery, and AR invoice. Okay, so it summarizes everything that we just perform. Okay, so one-time customer uh, has a debit of 41.13. Of course, he gained that value from your uh, items. Okay, and then of course you also lost what we call the sales revenue, the raw materials. Of course, that is a credit on your side, but you have a cost of goods sold, meaning you just gain something here, okay? But if we'll be checking, where's the account? Okay, where's the account of 15,300,002A? Okay? So that is on the account of the payment, okay? As we all know, payments are not in the sales or the purchasing module. Okay, it's on the banking side, so it doesn't reflect here. This is just the accounts associated with the sales AR module. Okay, so if we dig deeper here in the payment terms, okay, so the payment means lately. Okay, so we'll just go to banking. Okay, incoming payments and incoming payments. Okay, okay, we can see here that we didn't open the incoming payments window, but it reflects what we just did earlier. Okay, so in this window, we can see the journal entry created with the payment that we just had. Okay, by clicking this link arrow here, and then we can see that we have a debit of 41.13 that came from our customer, which is on the credit side. Okay, so the journal entry is still not combined with what we have in the sales or purchasing. Okay, that's the AR invoice plus payment. It will just create a combined accounts for the transactions on that module only, and it will also create another journal entry for the payments windows. Okay, so let's check on our journal entry or journal entry. Sorry. Let's check on our chart of accounts if the actual money was or will be reflected on that account. Okay. So we'll go to financials and then chart of accounts, and then navigate to the petty cash, Luigi. Okay, there. Okay, earlier we have a zero balance here, but now we have 41.13. And if we'll be checking the history of this balance here, we can just go to this or click this yellow arrow here or the link arrow, and it will create a account balance summary. Okay, okay. We have a posting date of the date today, and then the transaction number, which is the journal entry number, and then the origin number or the document number that associated with this transaction. Okay, so this is incoming payment number 71. Okay, so let us double check. Okay, that's right. That is incoming payment number 71. Okay, so this is also from the offset account of 69999, which is the uh, one-time customer, and this is from incoming payments of that customer with an amount of 41.13. So from the cumulative balance of 0.00, we have a changes in this balance, okay, resulting to a total of or cumulative balance of 41.13. Okay. So what if, okay, what if we will be uh, let's say buying something with this account here, okay? We'll try to buy those two item again, okay? So okay, so let me just okay, there. Okay, so earlier we just had a sale of mouse USB, two pieces of it. Now we'll just buy to one of our vendors. Okay, so okay, so maybe we can just create a purchase order. Okay, there's no AP invoice plus payment here because that's just for the seller's perspective. Okay, here our perspective is a buyer. Okay, so we'll just have to buy something, okay, to maybe uh, Acme Associates. Okay, we'll buy to our branch OEC Computers UK with the item of mouse USB. So I'll just double click here in the item description and then type in here mouse USB. Okay, we'll just have to restock here so that it will be go back to 310. Okay, so 2. Okay, so we just sold that under 41 point something something, but here we'll be buying again with a lesser amount. Of course, this is a vendor or supplier, of course. Okay, so we'll just buy this one. Okay, okay. So there we have a purchase order number 268 containing two pieces of this one buying from Acme Associates. Okay, so in our inventory, okay, we can see that in the inventory data, on our warehouse, we just have an increase of 2 in the ordered item, and then it will go here on the in stock once that we will be receiving that after this uh, uh, this document. Okay, so if we will be receiving that, okay, we'll just have to go to the purchase order as the base document and then copy that to goods receipt PO. Okay, so this document represents that these items are in your custody now. Okay, so this is based on purchase order 268 and this is goods receipt PO number 268 also. Okay, so we'll just add that one and it will increase our in stock from ordered into in stock. Okay, meaning that the item that we just ordered are now in our physical warehouse. Okay, so to check that, you can just click on the item number. It will open up the item master data and then go to inventory data from your ordered. Okay, it's now on the in stock. Okay, so that's good enough to know, okay, that we just received the item, of course. Okay, so next is before we will be paying this item that we just received, we'll just have to create an AP invoice, okay, indicating an account or a balance to our account. Okay, it's like a document, okay, indicating that uh, we are responsible for paying whatever is in this document that is based on your PO and goods receipt PO. Okay, so we'll just have to accept the responsibility on paying that one, and then yes. Oops. Okay. Permissible range, of course. Okay. Okay, so due date, maybe there, December 30. Okay. Uh, June not valid. Oh, okay. Sorry. Uh, it's month date. Okay. It's supposed to be date, month, and okay. Here. Okay. Added one, and then there we go. We have now a balance to our vendor, Acme Associates. Okay, so to check that one, we have here, okay, BP balance of 23.43 to Acme Associates. Now, we'll be paying that, okay, we'll be paying that account or that balance using our petty cash that we just created. Okay, so we'll go to banking and then outgoing payments, and then we'll be indicating Acme Associates. Okay, okay, so we'll be paying for our own branch. Okay, so this is the transaction that we just had. Okay, we'll just select that one, and then right click, or if you don't have any right click, you can just click on the coins icon here, okay, beside the total amount due value. Okay, it will open up the payment means, of course. Okay, so we'll be paying cash from our JL account number 1530028, which is this one. Okay, there. Okay, so we'll be paying from this account with a total of, okay, right click, copy balance due, or you can just type in your 23.03. Okay, so there we have uh, declared the value that will be deducted to this GL account number. Okay, so this will be from your outgoing payments number 51, and the journal entry will be created automatically after that one. Okay, so let's add this one here and then add there. Okay, so to double check if we have balance in our business partner Acme Associates, you can just click here and then check again. We have no balance now. Okay, so zero balance. Okay, that means we just paid a total amount of 23.03 on this business partner using our account petty cash. Okay, so to double check on that one, okay, we have a journal entry created on this transaction. This is journal entry number 1619. Okay, so here, okay, you'll be clicking the yellow arrow there. Okay, we just have a credit of petty cash, okay, to our account with the discounts because we just paid early to our business partner, and then we have a debit for our business partner Acme Associates, okay, 23.43, which is the combination of these two here. Okay, so if you want to see the whole history of this account here, the petty cash, okay, you can just click here, or you can go to financials, chart of accounts, and navigate to that account, or you can just take the shortcut here by clicking the arrow, and it will go to the account itself. Okay, so in the balance, okay, you can just see there. Okay, it also added up another row of your transaction. Okay, this is transaction number 1619, which is the journal entry number. Okay, from the origin number, document number 51, which is our outgoing payments. There, number 51. Okay, and then this is from the offset account of vendor 10,000, which is Acme Associates. Of course, that's correct. And with a total of 23.03 with a bracket there, or open and close parenthesis, sorry. Okay, indicating that this will be on a negative value. So from your cumulative balance of 41.13, okay, you'll be deducting 23.03. Now you'll have your cumulative balance of 18.10 on this account here. Okay, on your balancing side here, you have a credit of 23.03 from branch OEC Computers UK. So it has every detail for every transaction associated with this one. Okay? So what if it was not supposed to be deducted from that account? Okay. So how can we return this 23.03 to this account? Okay? So the scenario is you just made a mistake and you paid for from the wrong account. Okay, so you have two choices. Okay, either you can transfer a money from an account here, okay, any account here, to this account, just to offset what is lost in that account, or you can also create a reverse journal entry for what you just did in your outgoing payments. So maybe we could try that. Okay, so there. Okay, we'll go back to our outgoing payments. Okay, so this is the last data record that we have. Okay, the paying of 23.03, and as you can see, this is nowhere to be or the copy to or copy from is not available here, or what. Okay, all we have to do is to create a manual journal entry. Okay, so just click on this one here. Okay, and then it will create a window. Okay, well, anyways, this window is just for viewing. Okay, but later, if we'll be creating a manual journal entry, it will be on the adding side. Okay, but be aware that if you will be performing this, the balance of your account to that uh vendor will also reverse. Okay, meaning you will have again your balance to Acme Associates, not like the ones that we have no zero balance here. Okay, okay. So if you'll be performing a reverse transaction or reverse journal entry under outgoing payments or incoming payments, the balance for that business partner will also be reversed. Okay, so here. Okay, so this is journal entry number 1619. Okay, and then all we have to do is right click and then duplicate this journal entry. Okay, so just click okay. So once that you have just created a duplicate of the journal entry, this is a journal entry number 1620. Okay, so not like the first one, this is just a duplicate. Okay, and then you can just click here reverse. Okay, so you can also add some remarks. Okay, reverse, when close parenthesis, reverse for the outgoing payments of the 10,000, and then the credit, okay, and then the debit. Okay, you can move that value from one column to another, or you can just put their negative sign. Okay, okay, so I just did some moving just to illustrate what is happening. Okay, so this is a reverse journal entry for your account petty cash. Okay, and it will also create another credit for the business partner. Okay, so if you will be adding this one here, Okay, it will reverse the effect of what you just did on your outgoing payments. Okay, okay. So let's try to check first the account. Okay, so financials and then chart of accounts, and then let's go to the petty cash, Luigi. There. Okay, so the balance is back on 41.13. Okay, so the detail would be this is from a record 1620. Okay, origin from journal entry 1620. Okay, offset account of vendor 10,000, and then we have a details of reverse outgoing payments, and then the cumulative balance of 18.10 as an increase of uh, the changes made here 23.3. Okay, so debit on that one, and that is performed by branch OEC Computers UK. So it's back on the cumulative balance of 41.13. Okay, now if we'll be checking the outgoing payments or the balance of our company to that particular vendor. Okay, so we'll just have to go to banking and then outgoing payments. Then as you can see, we have a business partner balance back to our Acme Associates because we just reverse our payment. Okay, meaning we just remove the payment from our records on that business partner, and it will reflect that we still have some dues to pay. Okay, so if you'll be choosing that, okay, and then from your branch, okay, it will reflect that it's not on a document from the purchasing AP or sales AR. Okay, it will reflect that this document that must be paid is based on this 1620. What's this 1620? That is the journal entry that you just created. Okay, so it will reflect that this is your balance and you must pay this because you just created a journal entry 1620 with a total of 23.43. So maybe we could just pay that one here by payment means, and then let's say we'll be paying this balance of us using let's say you just made a mistake again. Okay, okay, so it was supposed to be petty cash. Okay, it must reflect on the petty cash of your account. Okay, so let's just use that one, and then copy balance due. Okay, and then add that one. Okay, so let's see if that will reverse the reverse transaction that we had. Okay, so uh okay, just refresh this one. Okay, there we go. Okay, with a balance of 17.70. So it's not just like what we had earlier that we have a balance of 18.10 because the discount was removed. Okay, so it was removed when we performed the reversing entries earlier. So instead of having a cumulative balance of 18.10, now we have a cumulative balance of 17.30 because the 40 cents was removed when we perform a reversing entries on that one. So it was a loss. Okay, so uh that's it. That's the uh proper way on how to reverse a payment that you just made, okay, by creating a manual journal entry and reversing that. Okay, okay, so what if you'll be replenishing this account of yours with another account? Okay, so you don't want to have 17.70 on that account. You want to get some of this petty cash here with a large amount of number 210,852,000 210,852.85. Okay, maybe we could just get a little of this and then transfer this to our petty cash. Okay, so what we'll be doing that is manual journal entry. Okay, so we'll go to financials and then just go to journal entry. So once that you have opened the journal entry, it is on the add mode as a default. Okay, so maybe we could just have here a remark of uh, let's say transfer of money. Okay, here care of Luigi. There. Okay, that's good enough as a remark on this one here, and then we'll just have to indicate a general ledger account. Okay, you can either make the first account as a debit or credit. That's on your side. Okay, so maybe I'll just stick to 15300. Okay, so this will be okay on my account. Okay, choose that one, and then another account. Okay, so 1530. Okay, so petty cash there. Okay, so let's say I want to add at least let's say 500. Okay, 500 on that account, and it will be credited to petty cash. Okay, it automatically creates the balancing computation. Okay, so this is a manual journal entry that is used for transferring money, okay, or transferring balances to one account to another. Okay, so it reflects here a credit for this account, petty cash, and a debit for the petty cash of Luigi. Okay, so we'll just add this one here, and then oops, sorry, branch there. Okay, yes, then add that one. There, we just made a manual journal entry with a transfer of money from petty cash to your petty cash Luigi. Okay, so if we'll be checking, okay, it has a deducted amount of 500. Okay, from 852, it's now 352 here. And then for our petty cash from 17.70, it reflects 517.70 because we just transferred using a manual journal entry. Okay, so if we'll be looking at the history of this account here, there we have a journal entry 1622, which is the one that we just created. Okay, and then this is from the offset account 160000, which is the petty cash. Okay, that is offset from the petty cash account. Okay, so with the detail of transfer of money, okay, from your cumulative balance of 17.70, adding 500 amount, will have your cumulative balance of 517.70 from branch OEC Computers UK. Okay, so that transaction is also reflected on the history of this account here, the 160000. Okay, so it has a record there also. So if the auditor finds out that there's no referencing or what, okay, so that is the ones that they find suspicious if they perform audit on your company. But here in SAP, there's no room for errors like this one. Okay, so you cannot have a one-sided transfer because every account associated on that journal entry will also reflect history of that transaction on their balances. Okay, so that is on how to perform a uh, or create an account, a title account, an active account, and then use that account on either sales or purchasing. We also discussed the usage of journal entry by creating a reversing entry and then using an entry to transfer one balance to an account to another. Okay. So I hope you learned something here in our discussion regarding the use of accounts in SAP and how to manage them manually and automatically in SAP. So I hope you learned something and have a nice day.